What is up, everybody? Crypto Noah back with another video showing you all the possibilities in DeFi so you can harness the power of passive income to put your idle crypto assets to work so you can accumulate as much as you can before this next bull market. So today we're going to be covering one of the largest decentralized exchanges in PancakeSwap. So before we get started, I do have to say this video should not be taken as financial advice. Please consult with your financial advisor before making any investment decisions. This video is for your education purposes only, and like we always say, do your own research, but use this channel as a starting point. So as I was researching PancakeSwap, I realized that they have more features than any decentralized exchange in DeFi. So today, we're going to be going through all of their features. We're going to go through their tokenomics. We're going to go through their yield farming strategies. I'm going to show you some of their pools. Pretty much all of the inner workings and opportunities that you can use on PancakeSwap to make money on your idle assets, like I said in the beginning of the video. So without further ado, let's get into the content. All right, so before we dive into the docs, just want to pull up DeFi Llama and show you where PancakeSwap stands. So they are the number 3 DEX in terms of total value locked. They have 1.4 billion locked inside of the protocol right now, behind Curve by 200 million and far behind Uniswap. They are on 9 chains, as you can see here. And as we look here, you can kind of see that their TVL didn't really fall off a cliff. It was kind of just like a gradual downturn. But you know, that's with every protocol ever since the whole FTX, BlockFi, Voyager, Celsius debacle. So let's dive into the docs and see what's going on here. So here we are. So you can trade. They have low fees. It's decentralized. Trade directly from your wallet. Not new. That's how all DEXs work pretty much. You can earn cake through various ways, through syrup pools. You can earn through yield farms, earn trading fees. They have lottery, NFT collectible, a prediction market, a pottery, a lot of different things. So we're going to dive into all of these things. All right, so the first thing you have to do to interact with PancakeSwap is create a wallet. And I know MetaMask is the most popular wallet, but MetaMask actually isn't compatible with Binance Smart Chain. I'm not sure why yet, but I guess it is what it is. So it shows the wallets: Coinbase wallet, SafePal, Trust Wallet, Token Pocket. The best one I would recommend is Trust Wallet and Coinbase Wallet. It's the most compatible with the dApps on the Binance Smart Chain. All right, so they talk about how to use PancakeSwap without centralized exchanges. I would say you do have to start off from a centralized exchange because you have to buy it, but there are ways to buy crypto with just like a credit or debit card, and they actually offer it too. We're going to dive into that. But in regards to bridging, I always recommend using Stargate, stargate.finance. As you can see, you can bridge from all these different networks. You got BNB right here. And another cool thing about Stargate is that, you know, they're built on layer 0. And a lot of people think, myself included, because they're VC backed, that there's going to be a token airdrop. So the more you use Stargate, the higher your chances of an airdrop if there is one. They have a whole section on getting started on Aptos. I don't do anything on Aptos right now. I plan on researching them in the future, so I'll let you guys go through that in order to keep this video short. As we always say, security is one of the most, if not the most important thing when it comes to crypto. So you want to look for projects to have smart contract audits, multiple ones. The more, the merrier. And they have more audits than any project I've ever seen. If you look at all this, they've had different products on their DEX audited, not just the whole platform itself. So they got it audited for Aptos and pretty much everything. So that's really, really good to see. If you click on their roadmap, they kind of show what they've done, what's ongoing and recurring. All right, now let's get into the products, and you can see all of the stuff they have here. So token swaps, pretty self-explanatory how to trade. It's the same as on Uniswap. Let's go to liquidity pools. So this is their V3. So this is basically concentrated liquidity. If you're new to my channel, you know what concentrated liquidity is, but in case you don't, it allows you to go on a decentralized exchange and supply liquidity in a form of trading pairs. So let's say ETH/USDC. If you think ETH/USDC is going to trade between the price of 2,000 and 3,000, you can set that as your range. And anytime people are on the decentralized exchange trading in the fee tier that you selected, as well as the range you selected, you get to make passive income paid straight to your wallet. The wider your range, the lower your passive income, but also the lower your risk. The tighter your range, the higher your passive income, and the higher your risk, because when you go out of range, you experience something called impermanent loss, which is essentially like a limit order for the loser. If you go out of range to the upside of ETH USDC, you're going to be in 100% USDC. So the price you pay is foregone opportunities, because had you just held ETH or had a wider range, you could have experienced more price appreciation. But if ETH goes out of range to the downside, you're going to be in 100% ETH. And now the price you pay is you're buying the loser. But I always say, never provide liquidity for two assets that you don't mind holding on its own if it went out of range. And if you want to become a successful yield farmer and learn all the strategies you need to know in order to generate passive income, minimize impermanent loss, or use it for your benefit, click the link in the description, book a free strategy session with one of our team members. We're going to ask you a few questions and ultimately just to see if this is a good fit for you. If it's not, we'll be able to point you in the right direction, or at the very least, teach you a thing or two. So I digress. Let's get back into the content. They show you how to add and remove liquidity. So you basically have to, decide what range you want to provide liquidity in. You have to have that correct amount of assets. So if you're entering, let's say you have a range of ETH USDC 2,000 to 3,000. If the price is 2,500, you're gonna have 50% ETH, 50% USDC. But if it's at the top of the range more, you're gonna be heavier on USDC, and if it's closer to the bottom, you're gonna be heavier in ETH. They have a Zap feature, which is pretty cool, that allows a simpler experience for liquidity provision. So it allows you to add liquidity only with one token, with one single click, without manual swapping or token balancing. So that whole 50-50 example I just gave, there's a way for you, I'm not sure if it's for all of their pools, but like if you want to provide range and a liquidity and you have 50-50, or if you only have one asset, you can deposit that in and it'll divvy it up 50-50 for you. This seems like it's for their V2 and not concentrated liquidity, because it's saying it automatically goes to a 50-50 split. So yeah, it's no way that will work with concentrated liquidity, because if it's in a certain range, it can't just go to 50-50. So these are for the V2 pools. They have to be, but you have to keep in mind with these V2 pools, they use your liquidity for whatever the price is, and it makes your capital actually more inefficient, because it might not get used sometimes. There's one thing to keep in mind. There are always trade-offs. Another feature they have is stable swap. So stable swap is a feature to trade stable pairs with lower slippage. It's designed to swap specific assets that are priced closely, such as stable coins, pretty much. So USDT for USDC, or liquid stake tokens. So like, let's say you're swapping ETH for a liquid staked ETH. The price should be the same, or at least close. And this is an implementation of the Curve Finance AMM. And Curve is like the place you go for like deep liquidity in stable coins. So it sounds like they kind of forked that from Curve, or at least took a thing or two. And these are all the stable swap pairs and fees here. You can see they're pretty low. And they also show you how to stable swap. Another feature they have is on-chain limit orders, and that is pretty cool. So a limit order is basically a feature that allows you to, like, let's say you want to buy ETH. If it dips down to $1,000, you put $1,000, you put some USDC in your wallet, you'll give the wallet access and says, hey, when ETH hits $1,000, buy X amount of ETH in USDC, and then that way you don't have to be by your computer. However, I prefer to use yield farming strategies instead of using traditional limit orders, because you can make passive income to buy the dip. And I made a whole video outlining this strategy and its benefits. But basically, what I talk about is, if you want to buy ETH at $1,000, and let's say it's at 3K, instead of putting stable coins in your wallet and waiting for it to go down, you could be waiting 2, 3, 4, 5, 6 months. It may never happen too, but you may be waiting a longer time. So it's like, instead of that stable coin sitting there idly, what if you use the yield farming strategy instead? So let's say you want to buy ETH at 1,000, let's say it's at 3,000. You can provide liquidity from the range of 3,000 down to 1,000, or 4,000 or 2,000 down to 1,000. You can use something like Aperture Finance, which I also made a video on, and you can say, hey, once the price of ETH gets to $1,000, get me out of the pool. So you're going to exit the pool with 100% ETH, and however long you were in that position, you're making passive income as long as the price of ETH is between your range. So if you use 3,000 to 1,000, however long it takes for ETH to get down to 1,000, you're able to get paid passive income to buy the dip instead of paying a fee to exercise a limit order. It just makes more sense. All right, now let's go to the yield farming section, okay? You guys already know what yield farming is. It talks about, how to calculate the APRs, and they allow you to provide liquidity, and you get an LP token. You can stake that LP token and earn double liquidity in cake. So they pretty much show you how to, enter into a position, and we're going to do like a platform walkthrough, but if you want to see this, feel free to go through these docs. And the cool thing about this is when you're selecting your ranges in real time, like let's say you want to extend this range a little bit, it can tell you in real time your estimated APR. That's really cool. Uniswap doesn't have that. You have to use a different feature like Builder Metrics or Uniswap Labs or Revert Finance after you've already entered into the pool. Gives you all the details on how to keep track of your pools, the ROI calculator, all that stuff. Like, man, they have a lot of good tooling. Like this, I got to take my hat off to them. I really do. And it's good that they, spread out on different chains, because I'm not sure how Binance is going. I'm not sure Binance is going to be around in the next 5-10 years. Only time will tell. Now let's talk about BCake, and this is a farm booster for your Uniswap v3 farming position. So they have a whole guide on how to use it, but essentially it automatically boosts your rewards in the form of cake when you stake your BCake, and you can boost your rewards up to 2x. So, they just have a lot of different creative ways to keep their token locked up, to keep the price high, is what it sounds like to me. And if you want to go through the whole guide, they provide that here. You can go through all this stuff. And then they have VCake, which is short for voted escrow cake. So basically you can lock your cake in exchange for VCake, and then you get the opportunity based on how much you locked to vote on different proposals, how rewards gets divvied out in different pools. This is typical across crypto projects. So they show you how to get VCake, how to migrate cake from the pool, like everything you need to know. And if I go through all this stuff, this video will be 3 hours long. So I'm just giving you guys the high level. Now let's dive into their syrup pools. So syrup pools essentially allows you to stake cake and earn free tokens via single side staking. So if you click this here, it kind of shows you how to go through all of that stuff. They have different terms of staking that you can do, flexible, fixed term, et cetera, which is basically like you can have it liquid, so you can pull out whenever you want, or you can select a fixed term. Normally when you select a fixed term or a longer term, your yield is higher, because you have to compensate for the yield in the form of time. So if you're in it for a longer time and you're less liquid, it makes sense why you should get paid more money. All right, now let's go into their simple staking feature. So it says here, this allows PancakeSwap users to enjoy single-side staking of popular tokens such as Cake, USDC, and USDT on the BNB chain, supported by Binance Earn. Benefits: no impermanent loss, hassle-free staking, daily accrual, and then APR boost with cake staking. So basically, you stake your cake and you can earn different assets, whichever one you select, without having to worry about impermanent loss. And a good strategy that I like to teach people is like, you have a yield farming strategy. I don't like to compound my rewards. You take your rewards, you can either keep them in your same wallet or send them to another wallet. And then with the rewards that you earned, you can stake it. So that way you're double earning on the rewards that you already earned, but you don't have to risk impermanent loss, because, impermanent loss can take those rewards right away from you. So that's something to think about as well. Now let's talk about their liquid staking integration. So it says here, Pancake has partnered with Binance to offer the liquid staking integration for wrapped Binance ETH, or I think this is Beacon ETH actually, yeah, wrapped Beacon Ethereum token. This allows Pancake Swap users to convert and swap ETH to wrapped Beacon ETH easily on the Ethereum network and BNB chain. Okay, so to explain liquid staking, so you have Ethereum moved to ETH 2.0, which was a proof of stake consensus mechanism that they changed to. So instead of it proof of work, aka computation, solving the block rewards, now you have people staking their ETH, and the lottery selects from all of the different stakers. However, when you stake your ETH, it has to be locked for a period of time. So when they say liquid staked derivatives, it gives you a liquid stake token. So you lock your ETH, now you get wrapped staked ETH. So now you can take your wrapped staked ETH, you can yield farm with it, you can stake it somewhere. So while you stake your ETH and you're getting a yield on that ETH, you can take your liquid stake token and also get a yield on that liquid stake token and kind of double yield. All right, now let's go to their perpetual trading feature. So basically, let's dive into what is perpetual. So perps are a special type of futures contract without an expiration. Futures trading allows users to enter positions on margin, aka leverage, using borrowed funds to optimize capital. Using leverage allows a user to enter a position with a larger size than their account balance. For example, a user can take 10x leverage and trade 100 cake for the price of 10 cake. So essentially, they have a perp dex as well, where you can trade on leverage. Now, you really have to know what you're doing to trade on leverage. Like, crypto is an asset class that you can make a lot of money on. So you don't really need leverage. Like, people use leverage in the stock market because people are happy to get 100% returns in a year or less. But they use leverage because the returns aren't that high. You can get higher returns invested in crypto with no leverage than investing into the stock market with high leverage. Using leverage can be very dangerous because if the price goes against you, not only can you lose everything, but you can actually end up owing, aka losing more than everything. So they show you how you can use it. They have different modes, which is pretty cool. They have a glossary so you can understand all the terms. They give you the ability to trade Forex. Like, that's pretty dope, I'm not gonna lie. All right, now let's go to their gaming platform. All right, so it's probably like some kind of play to earn game. So the first one they have is Pancake Protector. It gives you all the details here. And then they also have Pancake Mayor, which is kind of like The Sims. It's a city building simulation game where people use in-game currency. You can earn mayor cash. You can use cake in the game. It's different cities. You can progress to higher levels, spin the wheel, all kinds of different things. I'm not a big game player, so I'll leave that to you guys to check it out. They also have another game in beta called Pancake Protectors. Show you how to play the game. They give you the tokenomics, etc. Let's dive into their trading reward feature. So this, it says here, is a new series of campaigns designed to reward loyal PancakeSwap users and stakers. You can choose a campaign that suits you, start trading, and become eligible to claim up to a 10% trading fee rebate in cake from trading eligible V3 pairs on the BNB chain and Ethereum mainnet. So they give you like all of the details around that, but basically, through trading on here consistently, if you become one of the top traders and you paying most of the fees, then you actually get a chance to get some of that money back. That's pretty cool. And they also have a cake stakers campaign. So the same thing with cake stakers, like whoever, it sounds like, stakes the most cake for the longest amount of time, whether if it's a mixture of both or one or the other, you get a rebate back on that as well. Then they have a prediction little game on here too. So you can predict whether BNB or cake's price will rise or fall. If you guess correctly, you actually get to win cake. They show you how to use it. You can go through all of this stuff. They also have a lottery, right? You can buy, it says here, as many tickets as you want, but you can only buy 100 at a time. And you can probably win cake prizes. And I'm sure you probably have to buy the lottery ticket and cake as well. Yeah, they have a lot of ways to, use the cake that they have. It's kind of interesting. They also have a pottery. So pottery is kind of like the lottery, but you get your tokens back. So in the lottery, you buy a lottery ticket. If you don't win, however much you pay for the lottery ticket, you lose. But in this, however much you pay, you at least get what you paid back every time. Then they have a whole NFT market profile system where you can, sounds like they're trying to create like some kind of Web3 social media around this. You have like an NFT profile and you can like, communicate with friends, show them like all your stats, your trades, all that stuff. Shows you how to set up the profile and everything. You can customize it. And then this is the feature I was talking about in the beginning. So if you want to buy crypto with your credit or debit card or bank transfer, they integrate it with some on-ramp services that allow you to do that. Now, the only thing I tell people about these is usually the fees are really high. Yeah, you can see these fees are really high. 3.9% for debit and credit, 3.9% for bank. It's much higher than Coinbase. So, if you're in a place where, you can't get access to an exchange or you can't get there quick enough or whatever the case may be, this might be an option you want to explore. There's a lot of wallets that offer this inside of the wallet as well. For example, Edge Wallet and My Ether Wallet. You can buy crypto with a debit card inside of there, and the fees are also astronomical. All right, now let's go into the cake tokenomics. So they give you like the emissions, like all of the deflationary mechanisms, all the reasons why they're burning it. It shows you how much is emitted each block, which is 40, and emissions each day, which is 1,152, or 1.1 million rather. But it also says how much they're burning per day, roughly, it looks like. So they give you the effective actual emission, which is 39,000 per day. And I don't think there's a cap supply because it doesn't say that here. So it gives all the deflationary mechanics down here, and it tells you why the burn is manual, probably because it's dependent on what's happening. Like this DEX has or platform I should call it, it's more than a DEX. They have a lot of moving parts. To be transparent, I don't own any of the Pancake token, but I think it'll probably pump with everything else in the next bull market, especially since they're the number 3 DEX and number 1 on Binance Smart Chain. So the market cap's 572 million. At their all-time high, the price was $41 and some change. Right now it's $2.16. So, if you want to buy it, I don't think it'll be a bad idea. You just have to keep in mind that there is no cap and it is inflationary. And just in my opinion, I think there are other projects where I would rather hold the token over PancakeSwap. But that's just me. And another cool thing, here's the team. Everyone is doxed. I mean, it's Twitter. It's not like you get people's LinkedIn. But, if you want to go through all the team members, look at everyone's Twitter and all that stuff, you can do that as well. It's always good to have doxed founders. There are projects out there that are legitimate, where the founders are anonymous, but more often than not, if they're anonymous, it's a reason why, and I don't always think it's good. Yeah, they could be thinking, oh, it's a gray area, I don't want to get in legal trouble, but it also takes away accountability because you can do something. If you're anonymous, people don't know who you are. You can literally scrap the project, start something else. It's easier to rug pull. These are all things we have to think about when you're making an investment. So now that we went through all the docs and all their features, let's do a platform walkthrough, and then at the end, I'm going to tell you if I would use this platform for anything or not, and why. All right, so here we are on PancakeSwap. So it gives you all of the stuff that we pretty much talked about. They have some pretty cool art on here. Pretty good sized community. Have a lot of articles if you want to read into that stuff. So let's start going through this stuff. So you have the swap, pretty self-explanatory. This is how most DEXs work. This is how you go to provide liquidity. So you can do V2 liquidity, where you just find tokens, or you can do V3. Click add liquidity. Let's say you want to do BNB and Cake. Right now, if you choose this range, the APR is 1.89%. The tighter you go, the higher. And again, this dotted line is where current price is. And these represent what percentage you are away from current price from the downside and the upside. The green is the up, red is the down. That's cool how they differentiated that. It's pretty intuitive. So let's see if we do ETH tether. Choose 0.5. So if I choose a range of 1500 to 30K, I can get 12% APR. The tighter I make it, obviously, the more I would make. This is their Perp DEX here. So traditional order book. You drag this to choose the leverage that you want to use. Looks like they have some kind of trading competition here. Here's their bridge. So you click this, and then it brings you to the bridge. So you can bridge from all these different chains. That's pretty cool. And then this is where you can buy crypto here. And this is the trade and reward section that we talked about. So I'm sure it shows you all of the eligible pools. All right, now let's look at the farms. So you can get 123%, and this is factoring in just providing liquidity as well as staking the LP token. So this is both of them. So if you provide liquidity for Cake and BNB and V2, and then you stake the LP token, this is what you can earn right now, 123%. Let's sort by APR here to see. You got Hey and USDT for over 1,000%. I'm not sure what that is. See if we got anything good here. Pendle BNB, 84%. That's not bad. Pendle's one of my largest holdings. Cake BUSD, up to 51%. Bitcoin BNB, 27. I'm not sure what most of these are. USDT BNB, 21. Not bad. ETH USDT, 36. And we are on the Binance Smart Chain. Let's see how the farms look on Ethereum. Still sorting by APR. Rocket Pool ETH and ETH LP, 373,000. It's only $52 in there. I'm surprised why more people aren't in that one, especially since it's Rocket Pool ETH and ETH, which is pretty much the same price. Canto ETH 214, Cake ETH 73, USDC ETH 68, Pendle ETH 63. Pretty good pools here. So yeah, now that you guys know how to look at them, you can look on Arbitrum, Polygon. I won't go through all of these. I just want to give you guys the high level. Here is the game. This is where you go to play the lottery. You gotta switch to BNB so you can buy the tickets here. And you have to buy the tickets with Cake. Prediction. This is in beta. Okay. So you can, looks like, guess the prices here. And it happens at a certain time interval. That's really interesting. And then here's the NFT section where you can buy and sell the NFTs, and I'm pretty sure this is where you can create your NFT as well. Maybe not. Yeah, so that looks like that's everything. All right, guys, so it looks like we just went through everything on the platform. Now, would I use PancakeSwap or not, and why? As always, the answer is it depends. Now, let me give you reasons why I would use it first. To be honest, if the yields are high enough, I'm gonna go for it. You know, they have a lot of smart contract audits, so I don't think they'll get hacked. I wouldn't use it on the Binance Smart Chain because I'm not sure how long Binance is gonna be around. Like, the DOJ and everyone's coming for them. They've been ducking and dodging the authorities for a long time, and I'm not sure how long they can do it. CZ stepped down, so they got different leadership. So I don't know what the future holds for Binance. But I would use it on different chains. If I was going to use it on Binance, maybe I'll use it for some kind of short-term strategies. I don't really do short-term strategies unless it's allowing me to get some kind of reward token. Like how I was telling you guys on the other video, how I was in the wrapped ETH OP pool on Gamma because they was offering other OP rewards that I couldn't get if I was just in the same range via Uniswap v3. I would use the syrup pools if I wanted to single side stake and the yield was high enough on the asset that I wanted. Once I'm confident that we're in a bull market, I might fuck around with the whole prediction thing because, you know, it's not hard to predict that cake's going to go up if everything else is going up. So that could be an easy trade. Not saying I'm going to do it. I'm just saying I would. It's like I would use the limit orders, but I'm a yield farmer, and I already talked about how I'd rather yield farm versus use a traditional limit order. So if I was going to use a limit order, then I don't see why I wouldn't use limit orders here. I'm not sure as to would all DEXs have limit orders. I don't think Uniswap has it yet. I'm sure they're working on it, but Uniswap is usually always my go-to. Now, let's talk about why I wouldn't. The yields are better elsewhere. It's easier to track it via APY Vision, Revert Finance, Builder Metrics, Uniswap Labs. Like, you just have a lot more tracking around Uniswap v3 versus all these other concentrated liquidity dexes because it's fairly new on these other dexes. Uniswap was the first one, and once their license expired, everyone else dropped their concentrated liquidity product. And, you know, the other reason why I wouldn't is because, you know, like I said, Binance scares me. And I've never been a big fan of the Binance Smart Chain just because of how centralized it is and just how sketchy Binance has been, even though they've never lost customer deposits. And I have mad respect for CZ. I take my hat off to him. He's a great entrepreneur. But me as a hedge fund manager managing other people's money, I have to really be super, super safe. I'm definitely a degen at heart. And with my own money, I'm not as, like, you know, nitpicky. So yeah, with that, I like to conclude this video. Guys, if I missed anything, if you have any questions, feedback, constructive criticism, whatever, I welcome all that stuff in the comments. Share this to someone else who is a Binance Smart Chain or PancakeSwap fan. Drop a like and consider subscribing if you want to support the channel. Like I said, if you're interested in this kind of stuff, book a free strategy session with me. But other than that, I thank you guys for tuning in. I love every single one of you watching, and I will see you guys tomorrow in the next video. Take care.